My name's Jessica Amir, a market strategist with Mumu. Welcome to the Daily. Well, markets have fallen from their brand new record all-time highs on hotter than expected inflation prints, and now there's a big debate going on if the Fed will pause rate cuts here. So it's a pretty jagged pill for markets to swallow. Inflation is sticky. Annual and monthly inflation rose more than expected. In fact, annual inflation is now up. It's at 3.3% year on year. And expectations for Fed rate cuts have been shaved right back with a cutthroat razor. The market has well and truly thrown away the idea of a supersized rate cut in November. But wait, there's more. The market's not even sure if the Fed will cut rates in December, January or March. Not one rate cut is now fully priced in. So when inflation is hot, perhaps too hot to handle, it doesn't appear it's too hot for some. But do consider that inflation could pick up again with oil prices up 16% in a month. So what do you need to consider when investing and trading? Well, this scenario could mean a higher US dollar and higher bond yields. And indeed, we're seeing that with their measures tracking higher overnight. Now, this scenario is putting pressure on the Russell 2000 index. It's now down 5% from its record all-time high. Remember that small companies in this index generally carry higher debt in comparison to the earnings they make. Meanwhile, we're seeing buying continue in quality and large companies. In fact, the quality ETF, QUAL, is trading around record all-time high territory. Nvidia is the biggest position in that QUAL ETF, followed by Apple and Microsoft. Speaking of Nvidia, its stock is chasing towards its record all-time high of $140.76 after it rose about 2% overnight. It's now at $134.81. That's its highest level since July. And there are many indeed underestimating the power of Nvidia. But if you scratch beneath the surface and look what sophisticated investors are telling us, if we have a look at options pricing, we can see that there are indeed more bulls than bears. 2 times more bullish calls for Nvidia's shares to rise up than there are bear calls. Also, we are seeing option traders bet that the world's second biggest company will soon hit $150. As for other stocks, Tesla is hot on the lips of traders ahead of the robo-taxi event, and focus is, of course, on benefactors from the lithium price, seeing its first monthly jump since May. Meanwhile, moving to other markets, there are calls for China's market to pick up after its huge sell-off. Hedge funds sold a record amount of Chinese shares earlier this week after the CSI 300 rose 35% in 10 days. And now investment banks are betting that China's market could rise 50%. 50% rather. Renaissance Macro Research says investing in China is one of the best set of investments that they've seen in 35 years. And that's the Daily.